The following is a presentation of TFNN. Live at TFNN, the Bull Bear Binary Option Hour. Brought to you by Nadex. Now, Tom O'Brien, Darrell Martin, and Steve Rose.
Welcome, folks. We get our man, Mr. Darrell Martin, Tom O'Brien. We appreciate you growling and prowling out here with us. And, folks, bottom line, if you come over to our website at TFNN, you see we've had a dynamic trading contest all week long out here. And today is the day, baby. Bottom line is that we'll see who comes up and over this whole contest today. Each and every day, we've had 5 different winners, and we will also have that today. Couple swings out here. So as of last night, folks, the top dog out here is 44,000 up in profit. Second's 27, third's 22, fourth's 20, 13, 12. And you can expect we get some nice volatility out here today. And there's no doubt, we'll see. First couple days, it was the currency markets that were basically given the juice underneath a couple of these winners. We'll see whether it's going to be the oil or gold market today because we've had some big action in it. Darrell Martin, what's going on?
Going?
How you doing, man?
I'm doing great. Well, one thing that's really important to remember for those competing in the contest is this only includes closed positions. So if somebody has an open, basically it's looking at their balance.
Right.
So if somebody has an open position at the snapshot there at the close, like Messina, he looks like he dropped off the board.
Yes.
But he really didn't drop off. He just was actually sort of sneaking up from behind. And, because he's on there 9.9, he's on there on 9.10. You don't see him on 9.11 anywhere.
Right.
And then 9.12 is bam, he's right there in first place.
Yeah,
so
that's
probably had a very large position on during that crossover, basically during the close of the market or whatever, whenever they took the snapshot.
Well, it's great. I am so glad you're bringing this up because what we'll do is I'll send an email out, too. Because that is important. That's crucial, folks, okay? Understanding that you want that position closed, period. Yeah.
Well, even if it's not closed, actually what's really important is don't think, like Gil, man, don't be thinking that you're in first place just because you're in first place. There could be somebody way ahead of you that has an open position.
That's my point, right? That's what I'm saying.
Oh, yeah, exactly. Yes, don't relax. Yeah, exactly. Right. Okay, right. Yeah.
Yeah, no doubt. And, of course, we get some nice volatility out here today. There's no doubt about it. The gold market, folks, so what gold's done is this. So picture this. And I wouldn't be biting, on a long-term basis, I would not be biting on this thing right now. We've got down to 1304. We're at 1317. And this is not a good-looking deal, folks. I mean, this is telling me that gold wants to run down to about 1263. So, we could hit 1226, which is another $100. This is really wild. This look out here today is just not cool, and it's going to be interesting to see how this baby shakes out, no doubt. And if excuse me, if you haven't listen to Darrell's show yet, folks, each and every day, 1 to 2 Eastern Time. Darrell's a great show. Now, so let's talk Nadex, let's talk your analyzer, and let's talk about how that thing works.
Okay. Well, on the analyzer, basically what you're going to do is when you go in and you want to make a trade, if you're going to trade Nadex, you have to look through a lot of different choices.
Yeah.
Just think about it for traders who've been trading for a while, let's think you want to make a call, buy a call or put on Apple. Okay? You don't just buy a call or put.
Right.
Right? You don't just go, I want to call. I want to put. You look through this big option chain, right?
Yes.
And you got different months and different expirations, and you got the weeklies, and you also got to go and you got to look at the deltas and the thetas and the vegas and all that stuff. And you got to figure out really what's going to be the best thing for you. So try to choose the best option for your strategy. That's sort of that's all the stuff you have to get through. So it's pretty normal. This isn't odd or different. People are used to this whenever they trade an option.
Right.
The difference is you don't have 6 months of option choices, which is nice. This is made for day traders. It comes right down, or short-term traders, and could be used by scalpers, but mainly short-term traders. So you come in here and you're like, you know what? I want to buy, we'll just say, we'll throw something out there. We'll say the euro or gold. You're saying, gold's dropping, whatever. We'll do gold. So, I want to go in. I want to either buy or sell gold. And just to put the choices up, now we got all this. So this is all your choices this morning, right now, on gold. So you have quite a few that you have to sort through. So if you can see that right there on the screen there.
Yeah, right. Okay.
I mean, that's a lot of choices to dig through. Okay? So you go in, you're like, well, I don't want that many choices. I don't want to risk more than $100 on my trade.
Okay.
And so you do that, and now we cut it down quite a bit. Now I don't even have to scroll to see them all. Okay?
Right. Yeah,
and,
look at that. Okay, cool.
Yeah, so it makes it a lot easier right there. And then you go, I want to, maybe it just bounced off. We had gold bouncing off of one deviation. Maybe I think it's going to do a bounce, or, right now you're thinking it may drop, right?
Well, no.
We got to get the pattern set up first.
It's going to bounce around. I think the move is done today. So now you'll have a spread of $4 or $5. Okay, exactly, right.
Yeah, okay. So I mean, you're basically playing like the swing today, just up and down. Because we went down, we hit one deviation, we hit 1.5, we bumped back up. Now we're up at 0.7.
Right.
We may bounce between that 0.7 and 1.5, like for the the rest of the day.
Exactly.
So maybe you're thinking, like it's sort of going to swing up or down 5 points. You think at this point it's going to. Let's just say we think it's going to go.
Well, yeah, I'll tell you exactly. I think it's going to go. Let me just get this thing. 1 second.
All right. Yeah.
So what we're going to do here, folks, is that what I'm looking. So check it out. So we got down to 1304. Then you had that spike. So the spike is saying that the thing wants to go back up to 1323. It's going to go test 1323, and we're at 1318 right now. So.
Okay. So you go here, and you just go, okay, well, I want to buy. Well, now you drop off all the sells.
Yep.
Okay, so it's a lot cleaner. And then you're like, well, now I got to make some choices here. And I got 46 minutes. I got 106 minutes. I got to decide how much time. 106 minutes is basically going to take you, or 196 is going to take you all the way till gold closes.
Yes.
Okay, the COMEX closes, the pit at least.
Right.
Open outcry closes down.
Right.
You'll still have the, glowbacks open.
Exactly, right. Okay.
Yeah. So you can hop in here now and, look at the different choices you want, and depending upon what trade you want to make. And this is really important information that people totally just don't get when they just look at the Nadex platform. Not only do you have the time, of course, that's pretty simple. Hey, I want it to go as long as possible, or I want a short trade, or whatever. That's pretty simple to do. But the one of the most important pieces, and it doesn't matter if it's big or small. It depends upon your trade, your target, your goal. But people don't understand it. Is the break-even distance.
Okay.
And they go in and they buy these spreads and they think, well, I like the one that has the $13 risk.
Okay.
And they're all excited about the one with the $13 risk. And but then all of a sudden they realize, they're like, well, this thing, they seem to always move slow. Nadex spreads move slow.
Okay.
Okay? And what's funny is all they're doing is they're buying a deep out of the money option.
Yep.
Which would move slow.
Yeah, which you don't want to buy most of the time.
Exactly.
Right.
So just understand that you're buying an option that moves slow. It's not Nadex. It's not Nadex spreads.
Right.
If you go over, this has the exact same pricing model if you go over and buy a COMEX option, okay, on gold. Or, we've looked at it before where I pulled up S&P E-minis and I pulled up Nadex spreads side by side, and they were the exact same price. Right. And so they're the same price. I mean, they're well priced. They're priced just using a Black-Scholes model.
Yep.
Okay, nothing fancy, nothing like trying to mess anybody over or whatever. People just don't get it. So if I buy this contract, I'm buying it because usually people will buy it because they see that it has like a $9, $10 risk.
Okay.
That's okay so long as you understand it has to move 3 points.
Right.
So I'm going to be buying this thing at 1320, and if I think it's going to move to 1325,
yeah.
Well, that's okay because, I mean, if it moved up to 1325, then, I'd be able to sell out at 1325, and that means I would make $5 on the trade or $50 for a $7 risk. That's okay. That's a good trade. That's, an $8, $10 risk, whatever, for a $50 profit.
Right.
That's a 500% return. It's just I got to understand that right now gold's trading like at 1317. And so for the first 3 points, I'm not going to make anything.
Zero. So, folks, if you're listening in your car, what we're looking at Darrell's screen, and it's really cool because it has the spread, number one. It has the break-even. We'll have him talk about that in a second. But then it has the maximum risk, and I'm watching this in real time, maximum profit, and the maximum risk has been going back and forth between $7.50 and $8.90. It's $8.90 right now. Maximum profit's $1.40. and the reward. So this is really cool, man. So talk to me about the break-even one. How does this work now?
Okay, so what we're doing is if we go in and I'll sort of put up a little gold chart, live gold chart right here next to it, okay?
Yep.
So right there. So that's 1317.8, and then this is like 1320.9 or whatever. I mean, it's sort of fluctuating around right there.
Yes.
But so right there we got 1320.9, 1318. So the difference between that is 2.9.
Right.
Okay, as a fluctuation. So $2.90.
I see.
So or
Okay.
29 ticks or 30 ticks because gold ticks in 0.1.
Okay, so that's how we're reading that. I got it. Okay. So,
Exactly. And so you can see up here we actually put what the tick for Nadex and gold is, and even what the equalization ratio is. If you wanted to make a gold contract equal to a Nadex contract,
Right. Right.
And so that's nice. We sort of do that math for you as well.
This is a beautiful program you get, man. This is amazing. Actually. Yep.
So right here, what this is saying is gold. Like if you buy something at 1320.7 or whatever,
right,
and gold's at right now 1317.6, it's going to have to move up about 3 points or 30 ticks to be at 1320.7 where you originally bought it at.
Exactly.
Because when gold expires, now this break-even distance, this isn't like how far it has to move for you to be profitable while the trade is live.
Right.
Okay? This is if you held it all the way until expiration at 11 a.m.
Yes.
Okay? Which isn't, it's a spread. It's not like a binary. It's not an all or nothing, know?
Right.
So you can do that. But so if you held it all the way, because you're going for 1325, and it just takes its sweet little time, how far up is gold going to have to move for you to get back your, $8 or $10 on this trade?
Right.
So that's all that's saying. It's to get back all of your money if you don't close it before expiration. Because it may move up like 5 ticks, and it overcomes the bid-ask spread, and you're break even.
Yes.
While the trade's open, because there's still premium in there.
Right.
Okay?
Yeah, no,
but when there's no premium left, if you held it all the way till expiration, then that's where it's going to kick in. And people go, well, that seems like a lot of premium, 31 ticks. That's not the premium, and that's another mistake people will make.
Okay.
So look at this. This spread is 1320 to 1335.
Right.
Okay. So the premium really, if you're, and this is sort of a an option term, but if what you're called out of the money.
Right.
Okay, and we even put the term right there for you. See what I say, like out of the money.
Where is that? 1 second. Let me find that.
Right under TM. It'll tell you whether it's actually we call it out of the market.
I got it. Okay, cool. I got it.
But,
okay, right.
And so that's if the spread at the underlying market, like gold, which is priced right now at 1317, the GC gold futures contract,
yes,
is outside of the spread.
Right.
Because the spread is 1320 as a floor, and up to 1335 as a ceiling.
Right.
So I always tell people I call them a box because the left side's where you get in, the right side's where you get out.
This is cool.
You
stay right there because we'll talk about the one that's in the money right after this, folks. Get our man, Mr. Darrell Martin, Tom O'Brien. We appreciate you growling and prowling with us out here. We have the Dow right now up 32. Nasdaq's off 12. S&Ps are down 2. We get gold down 13. Silver's off 24. We're going to be right back, folks.
Andy Hecht, the host of the Commodities Hour, recently launched his newsletter service, the Technomental Commodity Report, and only 6 weeks in, Andy has already recorded a triple-digit winner. Andy advised his subscribers to purchase a long-term call option at 46 cents on July 11th, and then sent out a special update Friday, August 16th, advising his subscribers to close that position at $1.40. That's a 204% profit in just 5 weeks. The Technomental Commodity Report by Andy Hecht is released each Thursday morning, and right now you can get a month-long free trial to this subscription while locking in the low introductory rate of only $39 a month. Andy Hecht has been a commodities trader for over 3 decades. Let his experience work for you. Sign up for your month-long free trial to the Technomental Commodity Report today at TFNN.com. TFNN is having an open house in the Tiger's Den for 2 weeks, and the best part is that everyone is invited and you just have to be a member at TFNN. The open house in the Tiger's Den has already begun and will last through our week-long virtual trading competition, which ends September 13th. Use this time to exchange trading ideas with other traders in the virtual chat room and to discuss trading strategy. For all the information and to take part in the Tiger's Den open house, log on to TFNN.com today. You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foreside Fund Services, LLC. Wouldn't it be great if you could get a red light, green light indicator that gives you signals on 25 different futures contracts? Now you can with Taz Signal Box. This red light, green light market profile system dynamically updates 24 hours a day and provides you with important trend and trade signals on 9 different commodities, 9 different indices, and 8 different currencies. Right now, you can receive a 2-week free trial to Taz Signal Box. For all the details and to find out how the Signal Box works, visit the front page of TFNN.com. McEwen Mining is a high-growth, mid-tier producer in the Americas with a market capitalization of $1 billion. Experienced mining executive Rob McEwen, as chairman, CEO, and president, owns 25% of the outstanding shares of McEwen Mining and has put in place an ambitious business plan with the goal of qualifying for inclusion in the S&P 500 by 2015. With $70 million in cash and liquid assets as of the end of 2012 and completely debt-free, McEwen Mining is poised for growth. Production in 2013 is forecasted to grow at 24%, reaching 130,000 gold equivalent ounces, and over the next 3 years, McEwen Mining projects that their production will increase to 290,000 gold equivalent ounces, almost a 3-fold increase from last year's totals. If you'd like to find out more about McEwen Mining, click on their banner on the front page of TFNN.com or check them out on the NYSE or TSX under the symbol MUX.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. Darrell Martin, Tom O'Brien. We appreciate you growling and prowling with us out here. We have the Dow right now at 32. Nasdaq's down 11. S&Ps are off 2. And we're talking with Darrell, and we're talking about his analyzer and how it basically it not only it takes apart the platform, folks, and it will not tell you, okay, which way the market's going. But when you decide which way you think it's going, what it does do specifically is give you the best mathematical trade setup, and then you can, there'll be 2 or 3 different ones, and then you can take that choice, which is really cool. So right now we were just talking about how one of them was out of the money and how many ticks it had to go in order to make money. And now, so if we, like right now we have gold at 13.15. So if we got one that's in the money, because it has to do with how close you are to break even, right? I mean, not everything, but...
Yeah, not everything, but that's that's probably the most important thing to at least be aware of. So if you're going to choose that, you're choosing it like on purpose.
Yes.
Most people choose a really far out break-even distance trade because they look purely at max like dollar risk.
You're right, and that's throwing your money away basically.
Yeah, it's
out of the money call or put, right? Exactly. Depending what side you're going on.
If you're going to do that, just do it on purpose, going, hey, I'm just looking for a low-risk trade. I expect it to move far enough to be profitable. If it doesn't move a pretty good distance, I understand I will lose everything. Now, I'll only lose $5, but I'll lose 100% of $5,
right. Right.
So, and one of the things I want to point out is if you're doing an out-of-the-money trade, your premium okay,
Yes.
is your risk.
Right.
So if you're buying it and the underlying market, like gold, is outside of that box spread,
Yes.
okay, then all your risk is pure time premium. There's no like intrinsic real value.
Right. Right.
Okay?
Right.
Now for everything else, there's value.
Yes.
Okay? So if we go over here now, we can look at, there's a few other spreads on the list. And I can, pick out of these which ones I might. Now, there's ones with higher risk. These are just the ones with, we narrowed it down to $100 risk or less.
That's right. Okay.
So now we have 3 basically in the money trades. And we got what I call in the money, and we got what I call, or in the market. Sorry, I keep saying money because I'm thinking of the in the money, at the money.
Yes.
But in the market, and I also have what I call at the market. Okay?
Right.
Now, at the market, and I don't know if you noticed that, but this just changed from an A to an I.
I did.
And so at the market means, well, basically the way I defined that was it's within at least 10 ticks.
Okay.
So that'd be 1 point on gold. At least 10 ticks of the underlying market. See, now that it went to 11, it went to an I. So if it's greater than 10 ticks and it's in the money, okay, it'll just show an I. So right now it's 10 ticks or less. It's at the market. If it becomes 11 or 12 or 13 ticks, it'll just become in the money. So at the market and in the market are the same thing. It's just at the market is closer.
Which is really sweet, man. I mean, yeah, because when you're taking a shot, folks, the bottom line is that you want to be at the market or in the market. I mean, that's my take on it anyways. You know what I mean?
Exactly.
Yeah.
And if you're in the market, just understand, again, it's got to move further. So you may not want that trade, you know.
Right.
And so especially like, the way I trade, when I hop in when it breaks a high, and then I trail my stops, and then I'm out. I mean, and I'll trail them, I give them enough room. I take my time.
Yes.
But when I'm ready to get out, I'm ready to get out. And what if your trailing stop gets hit out at 10 ticks? I mean, you would sit there for an hour to get a break-even trade. That can be frustrating.
Oh, big time. Big time.
And not that it doesn't happen, and I mean, break even, still break even, so you can't complain too much. But we like to put every edge we can in our favor, and so you have to go, is this a better trade for me? Well, there is one advantage. So let's compare. Okay, let's say like these 2 trades expired at 11 o'clock. They have 31 minutes. Let's just say that's just not enough. We think gold's going to move. We think it's going to move for the rest of the day, but we don't think it's going to be moving like lightning for the rest of the day at this point.
Okay.
It's got its big move out of the way. So we're going to go, you know what? Let's just get rid of these trades up here. So I'm going to put like 15 minutes minimum.
Okay.
Just going to drop them off. Okay, so now I don't even see those. They're not even in my line of sight anymore. Okay? So now I got these other 2 trades, and they have, this one has 3 ticks, this one has 10 ticks to break even.
Right.
They both have about the same risk, $80, $86, whatever, right?
That is so cool, man. Okay.
Now the profit is hugely different.
Look at that.
$70 versus 313.
Right.
Now that's maximum profit.
Okay, I got it. Yeah.
So this is where, it's not like an all or nothing, like a binary type thing. So this is where, I have to go, do I really think it's going to move more than 7 points?
Right.
If I don't, then I got to decide, does it even matter? Okay?
Okay.
Because, we're thinking maybe 5 points up and down most of the day, right?
Right.
So if I'm thinking it's maybe going to move up 5 points at most, up to 13.25, that's about 7 points, which that trade is okay. So now it's going to come down to time and break even for me.
Wow.
Because my profit doesn't matter. My risk is pretty much equal. Now it's time and break even.
Oh, it is, man. This is, folks, okay, you got to test drive this, analyze it. It's pretty amazing. You stay right there, Darrell. This is Tom O'Brien. This is TFNN. We have the Dow up 36. Nasdaq is down 12. S&Ps are off 2. We're going to be right back, folks.
With the stock market flirting with all-time highs and volatility back, now is the perfect time for a 2-week free trial to Market Insights. On Monday, June 24th, Tom O'Brien closed out all 5 open positions in his daily newsletter Market Insights, with all trades being profitable and ranging from a 2.23% gain all the way to more than an 11% gain in just one position, for an incredible 32.7% profit combined between the 5 trades. Let Tom O'Brien's years of market experience work for you. If you'd like to see for yourself what kind of trading newsletter Tom O'Brien delivers to his clients each morning, then now is a perfect time to sign up for a 2-week free trial to his daily newsletter, Market Insights. In a volatile market like we currently have, the potential for fast market moves like we've seen recently is a trader's dream. So don't wait any longer. Sign up for your 2-week free trial to Market Insights today at the front page of TFNN.com.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 9 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors.
Darrell Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Darrell Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's Nadex.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. Darrell Martin, Tom O'Brien. Appreciate you growling and prowling with us out here. And I do want to thank each and all the Tigers and Tigresses for participating in our trading event this week. It's been a great week. Today's going to be a great day. We will have the winner for you on Monday. That's how this is going to work, folks. But today there's a huge amount of trading going on today. I can tell you that right now. Yeah, big time. They're going for it. And you know what's so cool that what is happening, folks, is that we get some nice volatility inside the commodity market. So there's some action out here, no doubt. We're talking with our man, Mr. Darrell Martin. Now, hey, let me ask you something. So when we look at these two trades, the break even, and one of them is 4 ticks, the other is 10, and we're saying that, okay, we're looking for a small move. So percentage-wise, I mean, the 4 ticks is where it's at, right? Because when you look at, I mean, that's half the amount of the 10, right?
Exactly. So that's a big edge. And what you want to look at is notice how on both of these they have the exact same floor.
Right.
They're both going to expire, or they both have a floor of 13.10.
Yes.
Okay? So which means if you're buying them, neither one of them will lose money below 13.10.
That's amazing.
So what you got to do is you got to decide, because here's what you're getting for your 6 ticks. And you're paying basically $6, and you're actually paying $6 in premium for this.
Okay.
Okay, because if they're in the money at the money, okay, if they're in the market at the market, the break-even distance is your premium.
Okay.
Okay, if you're out of the money, out of the market there, then the max risk is your premium.
Right.
So you're basically paying $5 for the 12 p.m. You're paying $11, per contract for the 1:30 p.m. So you got to decide, since they both really have the same floor, is the hour and a half that you're getting worth an extra $6?
Exactly. Yeah.
And that's your decision.
Yeah.
But what's nice is, remember, and people go, well, I'm starting to make a decision. Remember, we started with this.
Right.
So the only decision you're making is that. You're really going to go, you've narrowed it down. We went and we said, okay, $100, and I want at least, say, 45 minutes or whatever till expiration. And I want to buy. And then we came down to two choices.
That's right.
So now it's just, do I want to pay $6 for another hour and a half of premium or not?
Right. And particularly on a Friday, folks, you don't. That's my take anyway. It just, interesting, man.
So now I'm probably going to go, if I think it's going to move up, that's only half a point. That's nothing for gold.
Right.
We've done that, I think, 5 times in the commercial break.
Exactly.
So, that's easy. So I'm not even worried about, half a point. So that would probably be my trade. I would go for the 12 o'clock when I'd be trading that one right now, because I really don't see any need to have, again, the big edge, the one edge you're getting from the 1:30, or look at the two edges. I guess you get an hour and a half. But you could also come back and buy it later, and it'll be $5, is you get that $325 max profit. But the thing's already moved over a deviation.
Right.
So the chance of it moving further, it's just sort of bouncing right. So it moved right down to a deviation, went down to a deviation and a half. Of course, we get these levels every day inside the scanner. And we put them at 8:15. And, look at how on the money that is. It comes right down to one deviation.
Yes.
Oscillates right there. Pops a 1.5, goes back up to the one deviation. And now it's just doing a swing between 0.7 and 1 right now.
Well, see, what's so cool here, too, folks, okay? This is where that it's money management. So if you stay on a consistent money management, and we know that we have the money management together because that whatever the risk is, but then you're cutting it down to the break even, and man, that's where it's at. So it's a whole different ball game. Instead of going for that grand slam, because the fact of the matter is, folks, if you had put a trade on earlier in the day in gold, I can see going for $30, $40, okay? But as Darrell just talked about, the move has already taken place, and if the move was going to, and particularly if you're looking at a 10-minute chart, when we got that spike, so the first spike down, folks, let's see, the first spike down, we did 5,400 contracts. The second spike on the way up, however, guess what? We did 7,800 contracts. So that spike, that's where I'm coming from. That spike, we already tested the low on an intraday, did it with lighter volume, and then at, 0830, you had the spike higher, so that spike wants to get hit. So it's like the larger move is over. Now it's going to bounce between those levels, and the closer that we get to noon, 1, now everyone's calm. Let's put it that way. And in the metals market, people are calm, okay? And then on Friday, that's important because it's like the hot potato, folks. When we close here in the United States, it doesn't open until Hong Kong, 8 o'clock Sunday evening. So it's pretty wild. So let's go from here. We had a question in the Tigers down. It was a great question. And if you haven't listened to Darrell's show yet, folks, an outstanding show. Darrell seems to be on every day when all these announcements are out. But this morning, we had the retail numbers. Okay, so he likes doing straddles on a retail number. Yeah, so we had the retail number out this morning, and this number, retail sales, they increased less than last month, and increased less than economists estimated, but the economists are like weathermen. I don't know how they... Well, I guess an economist and a weatherman, they never lose their job, man, which is a mind blower. It's not a mind blower. I know, man.
It must be nice to, be totally okay with being wrong because, nobody's going to care tomorrow. That's being a weatherman, right?
Oh, man.
So nobody goes back and looks at the weatherman's record.
Yeah.
He doesn't have to plot it and say, this is my percentage of right and my percentage of wrong.
Yeah.
He's got, the ultimate prediction job where nobody ever goes back and checks.
I know it.
So.
I love it. Seriously, man.
So, so I was trading the retail sales number. We got the retail sales number up, and I even work with some other traders. We're always bouncing ideas around on it. And
sure.
So what I do on these retail sales numbers is, or the news trade numbers, I go through and I look at everything for the week. I really only had 2 really solid ones. I actually had 3 because I had the wage, the as deep report. But as far as the normal, weekly, monthly ones.
Yes.
And both of them worked out really well. But what I did is I go and I pull the stats on FX because I've actually noticed I used to try indices. Okay.
Yes.
Indices don't move consistently enough a certain distance to be really good for news trading.
Okay.
Okay. For trading like in both directions.
Right.
All right. But FX does.
Yes.
In some weeks, like last week, I mean, we were loaded up. We had the ADP non-farm payroll. We had all the different interest rate announcements. I mean, it was like this news, heaven, man. Yeah,
right.
it was awesome. So this week we had a couple reports. So we had the Aussie dollar employment change report that came out on Wednesday. Made a great move. It moved 90 pips, and we had an expectation of at least 50. The average move is 50 pips.
Yep.
And
well, it's funny, the first 2 days, or first 3 days in the Nadex competition, it was that Mr. Zoo was doing the Aussie trades. That's what he was trading.
Yeah, and it was money, man. With all that employment change numbers coming in worse than expected.
Yeah.
The Aussie's been climbing up, and that pushed it down. And I mean, it was really good. The Aussie's been a great thing to trade lately. Period.
Yeah.
So, so he's definitely trading the right instrument right now for trying to go in on that competition. It's been awesome. And he picked the perfect one for the week. Well, on the euro dollar, your average move is about the average move. Well, 70% of the time, okay, it moves at least 50 pips.
Okay.
When the retail sales numbers come out. All right, and of course we had retail sales, we had core retail sales, we had core PPI, and we had PPI, all coming out at the exact same time this morning at 8:30. Okay?
Yes.
And so we know what the average move is. If I can get a move that's an average of at least 50 pips or more, that's really good because I can probably get a good trade and at least break even on the trade. That's why I'm so big on that 50 pips.
Okay.
Because a lot of my trades are going to be somewhere between like $30 and like $50 risk. And so if it moves at least 50 pips on average, usually worst case, I'm out at break even. So I like worst case being break even.
Yes, totally.
And then the average move within 2 hours after the announcement is 62 pips. Okay?
Yes.
So on this trade going into it, we basically had a maximum risk of, I put a maximum risk of $41. That was like my threshold. And so I then go in from there and I grab the scanner, okay, about 8 o'clock or so.
Okay.
And I'll go and I'll choose the instrument that I'm going to trade for this. So I'll go choose, in this case, euro dollar. I'll put $100 maximum risk and I'll do a 1-to-1. What this is going to do is it's automatically going to put, we're going to put in both directions as well. It's going to put straddles right on the screen for me.
That's amazing. So you can put both directions, too. What a trip this is. Okay.
Exactly. So I can hop in here, and I can grab, that one right there, and then I can go up and I can grab the 3270. There we go. And so, like, that would be what it would look like in the morning. Okay. So this is a P&L on the left side.
Yeah.
For those that are watching, and then on the bottom you got the price.
And
so the price
folks,
moves up, I'm making money. Price
Darrell's
moves
just
down, I'm
looking for
making money.
volatility. That's what's going on with this trade. So he's looking for movement. Period.
Exactly. So I don't care about the at the markets. Okay.
Right.
Because I'm expecting volatility.
Right.
All right, so there's a news announcement coming out. I'm expecting this thing to move at least 50 pips.
Yes.
So, and, on average up to 62, which means some will be 50, some will be 70, on down the list.
Yes.
So, if I can get in with an average or less than $41 risk, then I'm playing my averages, okay?
Okay.
And for my ability to get in and get out at break even or actually 1-to-1. My goal on the news trades is I'm not greedy, okay?
Yes.
Yes, some of these things will go to the moon and they'll fall, and you can make a fortune on them. What I'm really trying to do is just churn out base hits every time.
Right.
I'm just trying to get, like, if I put up $35 risk, I want to make $35 back.
Okay.
Okay?
Right.
And this one was actually pretty sweet. We went in on this trade, and I even had some traders send over their trades to me, which is cool whenever they do that.
Yeah.
And so one trader sends over their trades to me, and this is what they did. They went in and they put on, and I'll actually put it on the screen. I'll chart it on here for you.
Okay.
So it makes a lot more sense when you see it. So they went in and they bought a 3280, like right around here, around 8 o'clock.
Yes.
They went in at 8:04 is when they actually got in. 3280, and it went on up to 3380.
Yes.
Okay, so we can't even draw how far up it went over there, but we'll extend our box a little bit more.
And then crashed. Yeah, right.
Yeah. Okay, so it goes over, it flies up, 33, and they played this perfectly. This is from Mark. He actually played this perfectly. And because I call out the stats on the show.
Sure.
And so then we got 32.80 down to 31.80, right down there. Okay?
Yes.
So he goes in, and now we can, let's zoom in just on this section. There we go. So he goes in, he buys this thing, and comes in on the market. It doesn't look like that big of a move, but it was a nice big move.
Oh, yeah.
Okay.
It's a huge move in the currency market, folks.
So we got from here to here. We get a move up. We get about 45 pips. And then it goes from high to low.
Right.
Okay, that's what we're measuring there. We get 70 pips. What did we say? We said that it was going to move about average of 62 pips.
Wow.
So we're right on. Okay.
Yep.
Which is nice when the numbers play out, you know. And
Sure.
And then the spike is normally, our normal spike on this trade is 22. So we got pretty, which was like in the first, 5 minutes or so. And usually we get a spike. Sometimes we get a retracement on it. We didn't even get a retracement on this. I mean, it did the spike and then it came right back.
Right.
So really in those first 10 minutes there, we got about a 17 to 20 pip spike. So basically all the numbers were perfect. They were on target. And the results of the trade, as he played them out, let's see here. I know I have them up. And it's cool because he actually sent me the screenshot. So I love when traders send it over.
So if you're watching Tiger TV, folks, you'll see the actual screenshot. And if not, we'll explain it to you. But
so he sent this over. This is his trade that he did this morning. And went on. And so you can see the buy right here. The first thing, going in order.
Sure.
He bought the 32.80 to 33.80 for $26.
Yes.
Okay? And then he sold the 32.80 to 31.80 for $10.
Right.
So he had a risk of $36, which is less than the $41 max risk.
Yep.
Okay? These other things are just the fees that are all included.
$1.80 fee.
So round turn.
Okay.
Yeah. And because he did 2 contracts, so it's 90 cents a contract. He did 2 contracts.
Right.
So and then he went in, and he had a sell to close put up here at. Remember, his total risk was $36. Remember, we're going for a 1-to-1 risk reward.
Yes.
Okay. So he went in and he made his risk back $72. It went up to 33.16.
Right.
The actual market went up to like 33.22. Look at that. So I mean, he really, by following the rules and not being greedy,
right,
he was able to take profit on that long side.
Exactly.
Okay. Went right up there, took profit, did a perfect job. It hits that, then it turns around and comes on back down. Okay.
Yep.
And he actually was able to get on the other side at break even. Remember, he came up here and he sold it for $10.
He got $10 back. Unbelievable.
He bought it back because it was volatile. So he actually increased his return from 36 to 38, and that's with that's fees on top of it. So he actually made, I want to say like a 1.4 or something like that percent return. 36 into what is that?
650. Yeah, no, he got another 650 on top of that because that was the fee. Right. No, I'm with you.
Yeah.
Right.
Yeah,
right.
So he got another 650 on top of that, So he actually, he really did actually increase his return quite a bit. But just following the stats, just following the plan, not picking a direction. Okay, he didn't care if it went up or down. He didn't care if the thing that flew to the moon or fell all the way down. He played it conservatively. He went for the base hit, and played the trade perfectly. So. It's pretty sweet. It's just, that's how you play them on Nadex. You don't care what direction they go, but you need your stats, and you need to make sure that you have realistic expectations on your profits so you don't set them way too far out.
And you can see, folks, that what's the beauty about Nadex, too, you don't need a huge amount of money in order to trade this product, folks.
Yeah.
Darrell Martin, Tom O'Brien, you stay right there, folks. We'll come right back. The Dow, 47, Nasdaq down 5, S&Ps are flat. We're going to be right back, folks.
Patterns, profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's trading newsletter.
Patterns, profits, and peace of mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the Forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try patterns, profits, and peace of mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's patterns, profits, and peace of mind.
And get the edge you've been looking for.
On Wednesday, August 14th and Thursday, August 15th, Tom O'Brien advised his Gold Report subscribers to close out 6 of their 9 open positions, all winning trades ranging from a 10.6% profit to an incredible 48% profit in just one equity. And all 6 of those winning trades had been initiated no earlier than just the previous month. With the 600th weekly Gold Report issue fast approaching, Tom O'Brien brings an incredible wealth of knowledge and experience to the gold market and the equities within the industry. That's almost 12 years since this powerful newsletter first began, and right now you can get a 30-day free trial to the Gold Report by visiting TFNN.com. Make sure you're a subscriber, as this volatile gold market provides trading opportunities after declining all the way from $1,900 to under $1,200 an ounce in only 2 years. Get your 30-day free trial to the Gold Report today by visiting TFNN.com. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
What's the one thing that pulls people back from the breakthrough that they're moving towards? What's the only thing that really stops people from taking action? You and I both know the answer, and sure, we can come up with the reasons why we're not where we want to be, but the only reason that we don't do more with our life is fear. Or if you're an overachiever, call it stress. Simply put, there's something that happened to us in our past that's holding us back from the life we deserve, yet you and I are okay, we're here. So why should we let our past control our future? Exactly. We shouldn't. Hi, I'm Steve Rhodes with TFNN.com, and when it comes to your trading and investing, I can help you overcome your fear of loss. Together, we'll turn weakness into strength with a system I've developed called Mastering Probability. I'll teach you how to make your money work harder for you than you do for it. I'll teach you the tools that provide financial freedom. Go to the homepage of TFNN.com, click on my name, Steve Rhodes, and begin your journey of mastering probability risk-free. It's time to become a pioneer of your future versus a prisoner of your past.
Catch Basil Chapman as he uses his Chapman Wave methodology to call the markets. The Tiger Technicians Hour, next on TFNN.
Welcome back, folks. Darrell Martin, Tom O'Brien. We appreciate you growling and prowling with us out here. And, folks, don't forget, so when you open a Nadex account, you can open a demo account. You can open a real account as little as $100. You can come over to our website at TFNN, and you can test drive Darrell's Analyzer absolutely free. So if you're going to be out there trading that vehicle, folks, and that platform, check it out, because it's an amazing piece of software that just takes a huge amount of thought process out, mathematical thought process out, in order to basically set up dynamite risk versus reward trades out here. That's what it comes down to. And you know what's pretty cool, Darrell, what's really cool, actually, is that the way that you have this set up, even if people are trading equities, trading futures, the thought process behind this, when you hit it, will help them in the process of setting up a different vehicle trade also. Meaning, you wouldn't use that, but what I mean is that if you go when you go through that thought process, it's much better analytically that you're doing that exercise each and every time. Do you know what I mean?
Yeah, so and once you get that analytical process, you get the pieces down, you get them going, this actually becomes really easy. And, I was talking to some traders last night, like one of the things you got to get down that's really cool about Nadex is it all works the same.
Right.
I had one guy go, why are you teaching Forex? A lot of us understand futures or whatever, we were talking, I was like, dude, you don't understand. You could call it instrument A, instrument B, instrument C, instrument D.
Yeah. They
all work the same way. They all tick at a decimal or an increment of 1, whether it's 1 or 0.1 or 0.01 or 0.001.
Yes.
They all tick at an increment of 1, and the tick size is always $1. It doesn't matter whether it's the DAX, the euro yen, the euro dollar, the S&P, whatever. Gold, oil, they all tick at a value of $1. And since they all work the same, you don't have to wrap your mind around eighths of bushels and quarters and dimes and nickels and $10 and $12.50 and, all the weird stuff you have to do with futures and all the currency conversion you have to do with FX.
Right.
It makes it really simple. It's chart analysis. Who cares what the name of the instrument is?
There's no doubt.
So,
there's no doubt.
Because the fundamentals, the fundamentals, they have their place. But to me, and to you, the real place is ultimately, on the chart. You just watch the chart.
Because what happens there, folks, just as Darrell was saying, is that you can do multiple vehicles in multiple trades. And it's just did you win or not? That's all it comes down to. Because that's all it comes down to at the end of the day. Or at the end of the week, or the month, or the year, folks, okay? It's that clean. There's no doubt about it, man.
And see, I analyzed a bunch of different pairs. And see, I looked at like dollar CAD.
Yes.
It only 20% of the time it broke 50 pips. I looked at dollar yen. Only 17% of the time did it break 50 pips.
That is so cool. Man.
Whereas euro dollar, 70% of the time broke 50 pips. So that was definitely my my vehicle. And I looked at a lot of others too. That's just like 3 of them that I looked at. So as potential possibilities. So I was like, dollar yen might be a butterfly. That was one that I could do. And I'll put this plan together at the beginning of every week.
Yes.
And I'll analyze all the news reports. And, so if I go over to dollar yen, I look at that same report, and I go, what was the impact? And,
because that's what's so cool, because when you're talking, you know that the news events are coming out, so you can get prepared for that prior to it.
Exactly. So I actually have my plan. So look at that. We got a 30-pip high to low.
Okay.
Right there on dollar yen.
Yes.
So it really was like the smallest trade. And so that would have been the trade that I went in, and so I said I expected an 18-pip pop, which is about what we got there, and then 17% of the time it's going to break 50 pips. The average move was 49. It was less than the average. So if you could have went in on like a butterfly for an expiration at 10 o'clock of 30 pips or less, then you would have had a profitable trade.
So cool. Listen, folks,
so
don't forget,
a lot of ways to play it.
Each and every day, 1 o'clock. Darrell, great show, man. Appreciate the education. You stay right there, folks. Get our man, Mr. Basil Chapman, coming up next. And, of course, Nico and Paige are going to keep you healthy. And Darrell right after him. Have a great one. Have a safe one, folks.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil's subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to try out Basil Chapman's newsletter, The Opening Call, then visit the front page at TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday through Friday, 11 a.m. Eastern, on TFNN.